in a little bit, because Matt's asked a question about data. So don't worry, I'll come back to that in a little bit. All right. Or actually, no, we'll do all the questions that people have sent in, and we'll come back to that in a bit. So we'll stay with the questions that have come in. So we've got another one here. We've done that one. So this one, great question. Is 10 to 20% a month achievable for a day trader? Now, I'm going to wade in on this one as well, but I'll let you go first.
Okay. Yes, absolutely it is. But that's not a straightforward question to answer, because it all depends on your risk management. It all depends on your comfort zones. If you're happy with having more than one trade open at a time, depends on your trade frequency. It depends on many, many different things. But yes, absolutely, it is easy to get 10 to 20% a month.
Good. What would you say a trader, what three things would a trader need to have, maybe internally, in terms of how they think, and what would they need data-wise? Because we have a rule on the swing trading side that if somebody wants 5% a month, their data has to show them something different. Funnily enough, I was interested to see if someone's looking to make 20% a month, and we'll talk about averages and consistency in a second. What would their data have to show for them to hit that kind of level?
Well, for me, it would need to show 30% a month. If your back testing says 30% a month, I think in reality you'd be more than safe looking at 20% a month.
So would you say a mistake that traders make is they've got a number on paper and then they try and meet the same number?
Yes.
In reality.
Yeah. So that for me is why I trade more than one strategy at a time, because when I back tested way back in the day, the pullbacks and the other strategies I trade, they were all much of a muchness around 12% a month, roughly. They were all very similar. But of course, in reality, it was like 8% a month. But that's why I started trading up to 3 or 4 strategies at any one time, because then I'm getting my 3 times 8 is 24, and so on and so forth. But the downside to that, and there is a downside, is that, and we covered this in the room actually this week, I can't remember who it was. Someone said they'd had 24 losing trades in a row. And that's the downside of trading 3 strategies, because all 3 strategies hit their losing run at the same time. So again, you have to be pre-prepared for that, and you have to pre-plan for that. So
it was literally only last week we had a room session, and somebody in the room, I won't name names, turned around and said, well, the good thing about me trading 3 strategies is if one's losing, the other will offset it. And I'm like, well, you just made a complete false assumption. Yes, you might be in a situation where 2 strategies are losing and 1 offsets, but what if all 3 are losing at the same time? You have to, that's so important, guys, what Kerry was saying there. You have to be able to look and say, well, I've got 1 strategy that makes 10%, 2 that makes, and that second that makes 10. So if I trade both of them, I'll make 20. The question you should be asking is, if I trade both strategies, what's my worst case scenario?
Worst case scenario, absolutely. Yeah, absolutely. Because I still say to the guys, I remember ringing Ali from Gozo one time saying like, oh my God, help me. Because do you remember I was trading indices, a forex and a commodity, thinking, well, I'm being a bit canny here because they're all different areas and they'll never hit a drawdown at the same time. But it does happen, and it sent me into a real bad tailspin, didn't it?
Well, and we got you out when part and parcel of the game, and I think that's where accountability is.
And it was a massive lesson learned. And I always say the best traders are the ones that learn those big drawdowns or experience them early on, because they're the ones who are stronger moving forward.
As a trainer, if we had a scenario last January off the back of the live kickstart we did, we had 5 people come into the trading room. they were all nearly 15% up within 6 weeks. I'm more nervous when a trader is up 15% in 6 weeks, because
for sure, yeah,
they're either going to get, the risk is they'll get cocky, or they're going to experience a drawdown at some time. So you're better off getting through it and having the accountability there. Back to what you said about those correlations. A lot of people will make false correlations about, oh, well, yeah, I'm being canny here because these markets are not related, so they'll offset. Yet they've got no data to back that up. They're using fundamental stuff that they've seen on, I don't know, forex factory, and gone, well, when interest rates go up, the pound goes down, or some correlation to justify, rather than look at their worst case scenario. I think that's sometimes why we get less bums on seats as a training company, because we will tell people the worst case scenario of what they're going to do. Because I'd rather they have the worst case scenario, like you said there. Exactly.
Yeah, absolutely. But I mean, that is the downside. But then the upside is that they can all start winning at the same time. So your drawdown might be a bit hard to take, but your winning streak is that much stronger, and ultimately you're back in the black. So it's you just have to be pre-prepared for your worst case scenario, which is why, as you know, risk management's all about risk management, working that out correctly.
Yeah. So you and that's where the whole, so is 10 to 20% achievable? So in a scenario like that, if you were to strip that back for what I do with swing trading, is 5% achievable? Yes. But that doesn't necessarily mean every month you're going to hit 10%. You're going to have months where you're losing. You're going to have weeks where you're losing. So what better question to ask, and it sounds like I'm picking the question, but it's important, is 10% average per month achievable, or is 20% average? Because then what that gives you as the trader is a bit more scope, and you're not necessarily trying to trade. When I used to day trade, one of the mistakes I made was I would try and trade to hit the magic number at the end of the month. And invariably, those last couple of days, I'd end up giving money back by taking stupid trades just so I could hit the 10% mark or hit the 5%, whatever it was.
You just need to, it is a totally different mindset, as you know, from swing trading over to day trading, totally different. So, and you have to recalculate everything from your risk, everything. So it's like a new ball game.
Totally. Good tips. So great. I like this question.